Today is just a recap for what we are expecting in the markets. We're gonna go symbol by symbol that I covered on this channel, and I will tell you guys where we would want it to go to be able to get a clean play off of it. This is just based off of previous videos that are posted, and the pattern's not playing out yet. They are still forming. You guys have oil. You guys are in a head and shoulders pattern. This is a very bearish pattern. You guys want to come down and break this neckline that's all the way down here. This is just a form of support right here, but you have to break that too. You would want it to come down, hit the 200-day moving average, and if you trade oil, then you would want a bounce. It already has a high probability of bouncing because it is above the 200-day moving average. What you would want to see is the chart to come down, break this, possibly retest it, come down, hit the 200-day moving average that should just be moving across like so, and then a bounce. That is what you would expect to see. Now, it could also just break through, come back up, and then reverse down. That can also happen. But because the 200-day moving average is so strong, it's unlikely that's going to happen, but we will see what the future brings. But those are the two scenarios that you are waiting for on oil. Here's your 2-year yield. You guys have the symmetrical triangle. This is a pattern that can break either way, but because you guys are above the 200-day moving average, you guys have a whole bunch of support to the upside. So what you might see on the 2-year yield, which is what the Fed follows for interest rates, by the way, is a breakout and ideally a retest, and then it goes higher off the screen. But we'll see what happens in the coming future. This can still just bounce around in here like this, and then it can actually go all the way to the end, and then not until then break out. But we will see what the 2-year yield brings. Overall, the 2-year yield is very bullish, so there is a high probability of it breaking to the upside instead of down. Here's your 10-year yield. Yes, my lines are messy on this one, but this is the pattern you're focusing on. This one's from a bigger pattern, and then this one appears from an even bigger pattern that lasts years, maybe a decade. But short term, that's what we're playing here. You guys are in a similar symmetrical triangle to what the 2-year yield is stuck in, and this 10-year yield is your interest rate on your mortgages, slightly different than the 2-year yield. And then you guys are above the 200-day moving average, so you have a high probability of going up higher. Like the 2-year yield, you can possibly see a whole bunch of bounces in here before it breaks that way or it breaks that way. But we'll see what it decides to do later in the future. And because this goes for all the indexes, I'm just going to use the S&P 500, the most stable out of all of them. You guys are running straight up. Amazing for your accounts, but you guys are overextended. Usually when you go close to a 20% run, it has a strong pullback and you guys give back a lot of it, usually more than half. It is very, very rough, but you can give back a little bit more than half, or you can give back all of it and just keep going lower. But we will see, because you guys are above the 200-day moving average, so you guys are very bullish to the upside. And you guys have a trend line right here that needs to be broken, and another trend line that goes back several years. And this one's not relevant anymore because, well, we found support on it, kept going higher. And overall, you guys are just waiting for a pullback on here at some point because you don't want to get caught buying at the top. Right now, you're just sitting and waiting. Maybe you got in at the bottom, took profits on the way up. But right now, we are just waiting for a pullback, seeing if we get a bounce, and then swinging higher. That's about it for the S&P 500. Just waiting for right now. And the other two indexes, the Dow Jones and the NASDAQ. Your Bitcoin, I haven't mentioned this one in a very long time, just because you guys have been stuck in this pattern for so long. Remember, each one of these candles are 1 day, so you've been in here for a very long time. You guys are starting to peak over the 200-day moving average. This isn't a clean breakout, so I don't count it yet. And you are below it, so you might get a rejection and come all the way back down. That's why I haven't said we are going up or we are going down, because we're stuck in this pattern. So it's just a sit and wait game, just like the S&P 500 and those indexes. Here's your gold on the daily time frame. You guys are starting to go up a little bit here. I did say, I think it was on Friday, that you guys are going to the upside, going very bullish. Same with silver, that I'll pull up in a little bit, but you guys are going to most likely come up and hit this price target here of 495 and 52 cents, because you guys are above the 200-day moving average. You have a whole bunch of support to the upside, so you will most likely hit there. Here's your silver as well. You guys have a strong candle in there today. Looks absolutely beautiful. And you guys are going to most likely come up and hit 124.91 cents. And that will fill the gap over here. I forgot to show the gap in gold, but it has another gap there too in the same spot. And if you guys remember gaps, we had some right here. Silver came up, filled it, beautiful. Even over here, some gaps on the way down, came up, filled it, but created another gap. So it may take a while before silver reaches the full price target, but we will see what happens. Overall, that is your outlook on these charts. It's mostly a sit and wait game. Today wasn't really much of a move. Today was just, oh, cool. Still going in the same direction, or we're still waiting for that pattern to form. But you can see these patterns take a while to form, but once they do, they are pretty accurate. And I will see you guys again Wednesday. And let me know if you liked my explanation down in the comments below, and subscribe if you enjoyed it.